Hello and welcome to Morningstar. I'm Emma Wall and I'm here today with John Chatfeild-Roberts, manager of the Jupiter Merlin Growth Fund. Hello, John.
Emma, morning.
So you're here today to give 3 fund picks. What's the first one?
Well, the first one I've chosen is Terry Smith's Fundsmith Equity Fund. It's a, if you like, a balanced fund of developed market equities that has very low turnover. In fact, they show negative turnover figures, but that's due to money coming into the fund. It buys some companies that you might have heard of, like Unilever. It buys others, perhaps lift manufacturers that you might not have done. It's all about companies that, as he puts it, don't need our money. They're not going to have rights issues. They have lots and lots and lots of small transactions which bring their money in, and they just keep gently compounding over the years.
A lot of what Terry Smith holds could be described as bond proxies, which some UK equity managers have been saying that may get hit when interest rates start to come up. Is that something you're concerned of, or these companies are so cash generative that they are? I think he once said you could just buy them and bury them in the garden and never dig them up again.
Well, it's interesting. If you look at history, sometimes you can buy these things when they are the most expensive they've ever been. But if you hold them long enough, actually, you come out ahead. And we do live in this age where you've got QE in the background, and that is depressing bond yields, and bond yields could well be low for a very long time. They've already been low longer than the First World War. The Second World War.
And what's the second fund today?
The second fund I thought we'd talk about was Findlay Park American. Now that's run, headed up by James Findlay. I've had money with James Findlay since 1992, which makes me sound possibly fairly boring. He left Foreign Colonial in 1998, set up this fund management group called Findlay Park. It was him and Charlie Park to start with. They've almost got a monopoly on some of the best American fund managers in this country. Everybody says the S&P 500 is the index that is most difficult to beat. Well, you look at James's and his team's long-term track record, they absolutely trounced the S&P 500.
And how are they able to do that? Because you're right, S&P 500 is one of those markets where quite a lot of people opt to go passive, because finding a manager that can outperform such a transparent and efficient market is extremely hard.
It's all about putting the work in, doing using the shoe leather, as people like to say. James has always had a value bias, so he's always been looking for those little gems that haven't been uncovered by others. It's got more difficult as the market has become more analysed, but they've got a lot of people covering a lot of areas. They've always tried to look one step ahead, so they used not to do technology. They've got a little bit of technology now. They started up a Latin American part with Rupert Brandt, which has had its ups and its downs, but they are genuinely very talented investors, and there just aren't many talented investors out there.
And what's the third fund today?
The third fund is one of our own. It's called Jupiter UK Special Situations. All these funds we hold in Jupiter Merlin Growth, run by Ben Whitmore. Ben's been at Jupiter since 2006. Before that, he was at Schroders. Again, a man with a value tilt to what he's doing. He's a very cerebral fund manager, low turnover, really thoughtful. Doesn't speak that often, but when Ben speaks, you really listen to what he's got to say, and his record bears him out.
And is his style then, does it have anything to do with what's going on in the macro backdrop, or is it much more about stock selection? Because you've mentioned 2 UK managers there that have completely different styles.
Well, Ben is very definitely a stock picker. All as he would put it, the global macro noise is just that, noise. He's concentrating on his companies, what they're doing, and particularly what their valuations are compared to what the prospects are for their future.
And with those 2 managers in mind, with Terry Smith and with Ben Whitmore, you've got 2 UK equity managers. But I think that does highlight actually that looking just on the face of it at Region doesn't necessarily give you an idea about how to blend funds. You need to go deeper than that.
Well, if you look at Terry Smith, I personally would say he was more of a global investor, but But the interesting thing is, if you look at the companies and then look at where the cash flows are coming from, Coney Lifts, for instance, has a lot of business in China. If you look at the FTSE 100, and obviously a UK fund such as Ben Whitmore's is UK focused, I think Tesco, the last time I looked, was 14th on the list, and that was the first time that you got a company that had the majority of its earnings coming from the UK. So many markets, and particularly the UK, are very international, and so what you're actually getting with an investment is not necessarily exposure to the UK domestic economy. You're getting global exposure.
A lesson on why it's important to look under the hood.
Very definitely.
John, thank you very much.
Emma, thank you.
This is Emma Wall for Morningstar. Thank you for watching.